Hey traders, welcome back to another daily profit and loss recap video. Today is Friday, August 11th. I just finished up trading for the day and for the week, and I locked in $1,121 in profits with one trade in the stock TNGX. In this video, we're going to break down this trade, talk about my entry points and my exit points, as well as my thought process behind the trade, so that hopefully you can take something from my trading and apply it to your own. So for those of you that may not know, all of my trades I post about in real time in the Market Master group. There's going to be a link down below in the description for you to try it out yourself. But I want to just kind of go through these posts that I shared today in the group with the stock TNGX to kind of go through the entire process of what I was thinking behind this trade. So with that being said, the first post today with TNGX was that this was hitting the opening range breakout scanner. If we take a quick look over here at the scanner stream, all of these scanners are live streamed to our members every single day in real time, so that no matter what strategy they may be using for their trading, they're going to be able to find the best stocks to trade. Now, if we take a look down here at the opening range breakout scanner specifically, we can see at 9:35 this morning, just 5 minutes after the market opened, TNGX had a 5-minute opening range breakout at a price of $7.20. Now, at the very same time, we were also seeing that TNGX was getting near its inside bar breakout level on the daily chart as well. An inside bar is simply when we have a big candlestick like we had just a few days ago, and then the following day there's going to be a smaller candlestick that is completely within the range of that previous candlestick. An inside bar breakout is then when the price is able to push above the high of that inside bar, and that's often going to be a really good indication that the stock is picking momentum back up. And from there, we can often see these stocks spike back up to the high of that previous big momentum candle. So with all of that being said, those were the two reasons that this was on my radar in the first place, and those were the two reasons that I was interested in buying into this stock. So pretty much right away, I took a starter position. This was at 9:37 this morning, and I mentioned that I was going to add into this position if we ended up getting a dip or a pullback down to the $7 area. On this trade, I was using the morning low for a risk level, which was $6.81, and I was looking for a push up towards $8 to start locking in some profits. Now, we can see that pretty much right away, we ended up getting a dip down to the $7 area. It broke briefly underneath $7. That was the dip that I was looking for to add into. So I did buy some more shares into that pullback. I ended up with a total of 1,200 shares, and my average cost was right at about $7.15. Like I mentioned also, the risk level for this trade for me was going to be this morning low, which was $6.81. So in other words, I was risking about 35 cents per share, which would be a potential loss of just over $400. And this is important because you need to know how much you stand to risk on every single trade before you even get into that trade. Okay, but thankfully it did bounce back from that dip to $7, started to pick back up above VWAP, pushed to new highs, and I started to lock in a portion of my profits up here in the $7.70 area. The reason for that is because, again, taking a look at this daily chart down here, the previous day's high, which was the inside bar, was $7.59. So I knew that there was going to be potential that we would see a double top in the area. So I wanted to just make sure I locked in a portion of my profits in case that happened. But it was able to break through, continue climbing higher and higher. And then once it started to push through $8, volume finally started to pick up. I locked in the rest of my profits, technically a bit too early, in the $8.40 area. It spiked up and hit a high of $9.24 and has been fading back down ever since. But the reason that I was locking in the rest of my profits right around $8.40 is because if we take a look at the price action of the first day of this big spike, we can see that there are quite a few times here right around $8.30 all the way up to about $8.50 where we get these long upper wicks on these candlesticks, and it starts to become a little bit of a resistance area. So like I've said time and time again, I always like to lock in some profits into resistance areas. And that is why I sold the rest of my shares and ended up with a profit of $1,121 on this trade. Keep in mind that once again, I was only risking a little bit over $400 on this trade, so my profit ended up being almost 3 times what I was risking. That is ideally what you want to see when you're getting into a trade. You should have a risk level in mind, and you should know how much you stand to lose And ideally, based on the nearby levels of resistance and based on your profit target, your potential return on that trade should be greater than whatever amount you're risking. All right, now with all of that being said, since I only had one trade today, like yesterday, I want to just go over a few quick questions that were posted in the Market Master group, just to make this video a little bit more interesting and to make it a little bit more educational. So we had a question today from Phil T about when to place a stop loss order. Is it as soon as you enter a trade, or do you use a mental stop loss? I asked because yesterday with MF, the nasty wick down kicked me out for a loss before it jumped straight back to my profit target. So for me personally, I will say that most of the time, unless I'm stepping away from my computer and stepping away from my desk, I'm just using a mental stop, which means that if the price falls back down to wherever my risk level is at, I'm going to just sell and manually exit out of the trade. I don't necessarily recommend that, especially if you are a newer trader, because it does require you to be very disciplined, and it only takes one time where you don't manually exit out of your trade that can turn into a huge loss and wipe out days, weeks, or even months of progress. So I do recommend using an actual stop loss order. And when it comes to where to actually place that stop loss order, that has to be dependent on the chart itself. For example, right here we can see that there is a little bit of support starting to form right at about $7.55 on TNGX. Like Phil mentioned, he said that yesterday with the stock MF, the price fell down, hit his stop loss order, he took a loss on the trade, and then it came straight back up and actually ramped up to where his profit target was. That happens from time to time, but the best way to prevent that is to make sure that you're placing your stop loss far enough away from a key level on a chart to avoid getting stopped out on those false breakdowns. So if you have support here at $7.55, most people would think to place their stop loss order at $7.54, $7.53, and so on and so forth, very close to that level of support. And while technically that is kind of the right thought process to have, you have to make sure you're giving your stop loss some wiggle room, because false breakdowns do happen, and it's not very uncommon for a stock to break down 10, 20 cents underneath a level of support before coming straight back up and squeezing back up towards the highs. So it does depend on the stock that you're trading and how volatile that stock is, but with this example, I would probably put my stop loss order somewhere down in the low 740s. And even though that means that you are technically risking a little bit more on the trade, it's going to, again, help you to avoid getting stopped out in those false breakdowns. All right, so the next question very quickly from Andy L. Do you normally use limit orders or market orders to buy and sell? Simply put, I use a limit order probably 95% of the time. Like I said, even when I'm trying to buy immediately, I'll just place a limit order at or a few cents above the lowest ask on the level 2. That way there's never any major slippage in my positions. When you're dealing with market orders, depending on how much volume that stock is trading, and depending on how much of a spread there is between the bid and the ask price on the level 2, you can often end up getting pretty bad slippage on your orders, meaning that if you were trying to buy a stock maybe at $5 per share on a breakout and you use a market order, you might get filled at $5.10, $5.15, whereas if you would use a limit order, that limit order is pretty much just putting a cap on the price that you're willing to pay for your shares. So unless there is some kind of serious emergency and I'm trying to immediately get in or out of a position, I'm almost always using a limit order for my trades. All right, but anyway, that was my trading for Friday. Again, I ended up with $1,121 in profits on this one trade in TNGX. I hope you found some value in this video, and if you did, please make sure to give it a like and subscribe to the channel. And of course, if you want to hear about these stocks that I'm trading in real time, as well as work with our team of traders, get access to our day trade and swing trade alerts, our detailed trade plans, our live custom scanner streams, and so on and so forth, all of that can be found in the Market Master group. There's going to be a link down below in the description for you to get signed up. But anyway, thank you again for watching. I hope you enjoyed, and good luck with your trading.